if you've been watching me for a while, you know that I recently made $23,000 in 1 month from one funded trading account. Now in this video, I'm gonna break down exactly how I did it, because you'll notice there's a very similar trade in all of my winners to get me that funded account in the first place, and all 3 of these payouts. So if you're wanting to get results like these, you need to listen very carefully, because it's not just me, it's loads of people in WorkFX. Let's say Dan, for example, he made $10,000 plus last month from using these exact same methods. So put away all distractions and listen very carefully to everything I say in this video. This information literally took me from $10,000 worth of debt to making that kind of money on a monthly basis with relative ease. And all I'm asking for is 10 minutes of your time and a click on that subscribe button. Now there's a few things you're gonna need to understand throughout this video. First things first, trading is simple but not easy. The concepts I'm gonna be going through are relatively simple to understand, but very complex to stick to and execute efficiently. And now I know what you're thinking, it's very easy for me to say this on a camera now, but if you actually watch my videos, for example, the Dubai vlog, this is the position we're looking at today. Hopefully that's another payout. Right now, 7K up now, literally in seconds. That's fucking sick. We're 11.5K up right now. We've got the runners that didn't have a TP. But yeah, as you can see, positions all down there. A bunch of the Discord catching these that same trade as well. My Tenerife vlog. So the second position, which was the winner, came into this POI, which I was looking at to trade, but ended up being about a 6 grand position. I can't remember too well because obviously it was quite a while ago now. That was basically what the move looked like as a whole. Or even one of my day in the lives. Okay, so as you can see, we are 9K up on this trade now. About half it's gonna closed out, is closed out, and I'm probably about to close out the rest of it just to show it's my ACG account. There you go. This is the actual position. I literally took all 3 of these trades live on camera, either when executing the trade or when in the trade. These aren't results I'm making up for affiliation reasons with certain brokers, etc., faking deposits and withdrawals. These are legitimate results from legitimate accounts where I've shown the accounts when taking them as well. So if you haven't, I would definitely watch those videos as well. But for now, I'll talk you through the exact process I used in all of those trades right now in this video. Before we get into the depths of my style of trading, please do like this video and comment any concepts that you want me to go through in future videos. Right, let's get straight into it. So, first things first, you guys need to understand exactly what I'm looking for when I'm executing trades in the markets. But first of all, you actually need to know the basics of what I'm even talking about. So there's about 4 concepts I want you to really understand from this video. That is market structure. Look at that, fucking hell, Jesus Christ, get rid of that. Market structure, sessions and liquidity, supply and demand, order blocks, and execution models. Jesus, can't spell it all. Now, I'm gonna have to briefly go over these things in this video because I don't want it to be about an hour long, but I'm gonna make more specific videos going from each concept later on in this YouTube career. So I'll lightly go over each of them to explain how I'm executing trades, and hopefully, if you're not a complete beginner, that will make sense to you guys. So let's start with market structure. So market structure is when we're determining the bias of the market. So whether it's going bullish, bearish, or we're ranging / consolidating. Ideally, we want to be trading a trending market. Reason being is because we know that either sellers or buyers are in control, therefore we can align it with our order blocks, whether it be supply or demand. So in a lot of these trades, they were shorts, and I made majority of my money shorting the market out of POIs with higher time frame bias. This stuff might come across advanced, but it's not. It's simply understanding market basics like price action and market structure. So let's say price is moving like so, creating lower lows, lower highs, lower lows, lower highs. Then we're clearly in a bearish market. Let's draw a bear. So that would be a bearish market when you're clearly seeing lower lows and lower highs. Now what you'll get in a market that can confuse a lot of traders is fractal retracements. Now, on different time frames, market structure might be showing a completely different story. For example, you might be getting a movement up and you'll scale on the lower time frame and it'll actually look like this. Let's get rid of the bear. So as you can see, we've now flipped the market from lower lows, lower highs to a higher high and a higher low, a higher high, and potentially another higher low. Now obviously this is dependent on the time frame that you're on, so this will all be happening in this one leg. Now is that important? Yes, because let's say on the higher time frame we're very bearish and we see price aligning with our strategy, but on the lower time frames we're getting bullish movements. If it's then coming into a higher time frame POI, let's say up here, and you've got price moving like this on the lower time frames, and then we get a change of character, so price moves from a bullish to bearish market, then that would be extremely beneficial to our trade, as it would give us a bit of confirmation that we're going to continue a bearish continuation. That makes sense. Now, again, I'm probably going already too advanced if you're a complete beginner, and I've already kind of gone through what a bullish market is. But basically, a bullish market is when price is moving in an upwards trajectory, creating higher highs, higher lows, higher highs, higher lows, higher highs. So that's really important to understand because it normally gives you a bias on which direction you want to trade. Some strategies won't even look at the higher time frame at all, and that's completely fine. It depends on your trade criteria. But in this case, I'm using market structure and price action to basically either execute a position or determine the way that I want to trade. Now, the last type of market is a ranging market, and that's where you're seeing price create equal highs and equal lows, or maybe slightly something like this, and there's no clear trend, and we're basically ranging in kind of a consolidating period. This is what you don't really want to trade. It won't always be the case. Like, you might have some strategies which perform really well in higher time frame ranging markets. You might be a support and resistance trader, for example, and that might give you loads of opportunity, even a supply and demand trader to a degree. But that is the absolute basics of market structure. Very, very lightly touched upon, just so you have a basic understanding. The next part was session timings. So you'll probably notice that almost all my trades, I think actually in this case, all of them are in London session. Now, Frankfurt and London open are very close together. So you've got Frankfurt at 7 and London at 8. And they both run until around 10/11, before pre-New York, which I'd consider 12. The reason why this is really important information is because you're going to get an extreme amount of volume at that time, especially on pairs that are correlating with the Frankfurt and London markets. Reason being is because that's when the institutions in London and Frankfurt, or in Europe, are trading. That's really important as a trader, as they're basically giving you volume. And that's what we want as traders. In other words, volatility. This is getting weird. I can't even spell. There you go. So yeah, basically you want to be trading in periods when there's going to be huge fluctuations in the market. Not too huge in the fact that you're trading like news, for example, but big enough for you to be able to catch a good sized trade and actually reap the rewards of your position in a decent amount of time. So in the positions that I'm going to talk about, you'll notice that almost all of them are during that 7/8 open and holding till the start of New York or just at the end of London session. Now, the exact way that I'm going to be trading won't necessarily help you right now. There's a lot of different systems that we can help you with mechanically that we teach in Woke Effects that are a lot easier to understand with the basics, a lot more simpler rules. But this is how I made that $23,000. So if at any point this feels like it's too much and you're struggling, then drop me a message on Instagram at robdono or at dons.effects, and I'll send you over our free course. And also, if you're wanting, you can have a booked call with me as well, where I'll talk you through our process of teaching you guys from scratch. But yeah, basically, I'm always looking at London session. The next thing that I wanted to briefly go over was liquidity. So you'll notice that when I'm trading, I'm often using the Asian range indicator, and this is basically telling me the highs and lows of Asian session. The reason that I care about that is because anyone trading in the Asian session is going to have their stop losses at the high or low of that range. Therefore meaning that we're going to have people getting stopped out at either point when price is broken past that high or low. You'll also notice that I'm often looking for equal highs and lows during that Asian range because there's an even higher buildup of liquidity, as there's not only session liquidity there, there's also structural liquidity. The way you've got to look at it is if you buy here, you've got your stop loss here and your take profit up here. If price were to come down and hit your stop loss, then you technically have to sell your position, and selling your position frees up orders to be bought from bigger players like institutions. Therefore, when you are getting stopped out, or when other retail traders are getting stopped out, or even when bigger institutions or smaller institutions even are getting stopped out, this will free up orders to then potentially move to the next area of liquidity, which would be the opposing side of Asian session. And that happens a lot in the market, so understanding liquidity is really important. Again, not going to go through it in too much amount of details because it's going to be a hard concept for you guys to grasp just in this one video. I'm going to make another video going through it in a lot more detail. The next point that I want to go through is in these trades, I'm heavily looking at my POIs. So these are typically supplies or demands. I'm looking at areas of high buying. In this case, it's more selling pressure. Areas of high buying / selling pressure that have caused a market structure shift or break of structure. ideally with fair value gap, and ideally unmitigated. So price hasn't before touched it. So I'll go through examples of these on the charts in a second, and you'll see from the trades I actually executed. But basically, they're the key concepts that you need to understand for the way that I'm trading this account. The last one is having an execution model, and I'm going to go through that one on the charts. So let's find it. What was our trade? Recording on here. Basically, what it was a simple retracement after we had a market structure shift to the upside. So it actually was a long. I think it's my only long out of the positions. But basically, we were in a discounted range. Price had recently on the 15-minute changed character. Here we go, on the previous day. So here we changed character impulsively upwards. And then from here, we had an area that caused a small break of structure. Nothing crazy, but it was relatively decent area of buying pressure. You've seen a lot of bullish momentum from here. This was more a simple Asian session trade, Asian session liquidity trade. So you'll see it a lot nicer on the 5-minute. So here we go. As we can see, we had our liquidity here. There's not only Asian liquidity, but also structural liquidity here. Price swept past that low. We then had structure, and this is why understanding market structure is so important. Price was creating lower lows, lower highs, lower lows, lower highs. Our session starts, so Frankfurt Open starts. Price then created a new low. Then midway through Frankfurt Open, we get an impulsive change of character or market structure shift. So prices switched from a bearish market to a bullish market. Now, my way of trading is that I will take a position on the candle closure after the change of character. So I believe my first positions were up here. Actually, they might have been a bit lower. Now I typically aim for areas of liquidity, or normally I'll take partials at the other side of Asian session, but in this case that would only give me a 2R, which is actually a very good risk reward. You only need to have like a 33% win rate for that to be worth it. But I do believe that I was aiming for higher amounts of liquidity, so I think I ended up targeting up here, but I think I was quite happy with where we were at, kind of around here, so I was looking kind of towards these areas here. Ended up getting around a 4R, which is quite nice. And not only did I take the position here, but it perfectly lined up to London Open, so we had our impulsive change of character. Then for 8 a.m, we scaled it in down here, so I actually doubled down on the position, so a slightly increased risk. I think it was 0.5% here, then 0.5% here, so overall 1% risk. Dialing in down here, I think it was on this imbalance, just meant that I was even more confident on the trade, because obviously we had these candles to back up how impulsive that move was. Caused a change of character after that super liquidity. I believe there was probably a couple partials. I'd imagine I would have taken partials here initially and closed majority of the trade up around into these areas. I can't remember exactly because it was quite a while ago now, and I'm filming this at 2:20 in the morning, but I think I closed it up there. I can't remember exactly, but that was my execution and the reasoning behind the trade. The indicator that I'm using is Asian range by Nico. Make sure you can see that. Why am I moving that? Okay. So if you can see up here, it's Asian range by Nico. These are my settings. Like I said, it's nothing to tell you like when to buy or sell. It's literally just telling you stuff that saves you time. So like I could note this high and low of Asian session, this high and low of Asian session, but it'd be pretty pointless because I could just have the indicator show me where it is. And then I just need to read price action on my own. The reason why it's important to understand price action and for you to be able to read these execution models, these changes of character, this market structure shift, whatever you call them, by yourself, is because if you have an indicator telling you when to do it, you're probably going to get in late and not really understand like what you're doing. It's important that you understand how to read the market consistently. I actually got my execution on the 1 minute initially down here. Again, I'm not going to do it in too much detail, so this video is not too long. You can even watch back on the video. It's literally at the end of the Dubai vlog. I take the position live in front of you guys. Did it on 2 accounts as well, so I did it on the day funded account as well, which I've got 8.5k waiting to get paid out, but I think the prop firm's gone under, which is a shame. But yeah, this is basically how I executed that position. The other two were very similar, a bit more POI based, I believe. This one didn't have the biggest POI in the world, but we had a very nice execution model based on the same concepts, like I said, changing the market in the direction that we're wanting to. So here, after we're sweeping the side of liquidity that we're wanting to as well. What's happened here? So yeah, if you haven't watched that video yet, it's literally here. I was just getting up the time because it was a good time to get it, around the 25th minute of the Dubai video. So if you haven't watched that already, make sure to watch it. It's a really, really crucial video. It's really funny as well. It's probably my favorite video we've ever done. Really insightful. But yeah, ultimately, that is how, and that is relatively a brief understanding of the strategy that I'm using and the concepts that I'm looking at when I'm taking trades. Very, very simple and brief video explaining that. I will do this in a lot more depth come soon. We're actually going to create a more detailed mini course for you guys that's free on YouTube. They'll go through these concepts in a bit more detail, as well as we're going to be completely redoing the WokeFX courses for anyone that is in WokeFX, just so you have even more insight on how we trade. Obviously, the majority of the value in WokeFX is having one-to-one mentorship, whether it's through me or any of the other mentors who are all at least $500,000 in funding that have been taught by me anyways. This is a very simple example of how I've made $23,000 in 1 month using and utilizing funded accounts that are basically risk-free once they are funded. I've actually managed to make just as much money as this. I think it's about 25 grand in pounds, which is even better, and no profit split on my personal account last week. So even more impressive, but that was in a completely different style of trading and swing trading. I don't normally do that, and it probably seems like I'm jumping and changing concepts, etc. The best way to trade as a beginner is having clear set out criteria that you just basically consistently stick to. I can go through that as well in another video. I've already done that in, I think it was last week's video or the one before, so if you haven't already, make sure you watch that. I'm going to try and provide as much value for you guys as possible, so please do like, comment, subscribe if you found this video anywhat beneficial, because I'm going to try and do as much of it as possible for you guys. Thank you very much. Please do, like I said, subscribe, like, comment, follow my Instagrams. If you need any help, message me. Click the link below to book a call with me as well and get involved with Woke and understand how we actually trade in a bit more detail. Thanks for watching, guys.